Hello traders, this is Greg from Master Trader, and we're going to go over some concepts here that we use to analyze price action. So over the last couple of weeks we had, let's just call it a little mini crash of a sharp move to the downside in a short amount of time and a 10% correction. Looking at similarities, we have about a 10% correction here going back to September of 2020. So does a 10% correction in the past equal a 10% correction at this point in time? Let's look at the differences. Back at that time, we had an advance, and we were expecting a drop at that time. We didn't know whether it would be 10%, but let's look at this, what happened. It was an initial move out of a consolidation, which was bullish price action at resistance. When we see prices going sideways at a prior swing high, pivot high there, and it goes sideways, and we see candles that refuse to go down, what we call bottoming tail candles, we view that as bullish price action. Prices moved up. There was a large red candle that didn't follow to the downside. It went sideways again, and it accelerated higher, creating what we call a price void below. Now, that doesn't mean you're going to have a 10% correction, but prices got a bit extended, common sense, and prices would likely pull back or go sideways. Now, when they started going down, they went down with what we call a wide range bearish bar or a power bar that suggests that prices are going to continue to move down. Now, just like we see bullish price action at resistance, when we see sideways price action at support and failures to go up, that's bearish, and it suggests it's going to go lower. The next question is, lower to where? Well, to the next support point. Then we don't know whether it's going to hold, or it'll go down further, that's the 200-day moving average, or whether it'll advance like it did. So let's take a look at the current situation. And it's a bit different. So we have a downside target of around 10%. Why? Because it's in an area of price support. There's no clear sign of a turn yet. It was just a wide range bar that ended the day last week. And so we're looking for prices to move down here where prices might stabilize. Now, what's the difference here? Prices went sideways in a whippy type of a price action prior to the similar type of momentum move higher. Then there was a breakout failure and the power bar down. It attempts to hold, it can't, and another power bar down. Now it tries to hold at this prior swing low, this pivot, and prices gap below. Sets up a shock, down again, goes through all of these, it's like it's not there. And so the selling here is much more powerful than what it was in the past. Now, when it gets down here, our assumption is that because it moved down so far, so fast, and ideally it comes down here quickly at the beginning of the week, it then begins to stabilize, and what we'd want to see is similar type of price action, meaning if it can form a bottoming type of price action over the series of a few weeks, that would support a bigger move. If it comes down here and makes a V type of a bottom and moves up, typically what happens, let me just draw this over here. Typically what happens is it then comes up and sets up, maybe in the area over here, of a new sell setup. Now, the first sell setup after a sharp move like this tends to be lower odds. So what we're going to look for, again, we're looking out into the future here, and we'll see if it actually plays out that way, is a retest pattern over here. So retest patterns are one in which you get a reversal, it starts to move down, it has a shallow retracement, it comes back up to retest, and that is where we would look for a short setup to resume the move down. So we're not looking for this to be ultimately over. Our market internals, we'll cover that in another video, suggest or support a bias that a bottom will happen sometime this week. And then from there, we'll have a tradable play off of the low. And then if it forms this retest type of a pattern, we'll look for a new short setup. We'll be covering these in our pre-market analysis that we do every weekday at 9 o'clock in the morning here on YouTube. So get signed up for that. You'll get an alert. Press the button to get alerts and just follow along, and we will explain how this is going to play out at the low, on the retracement, and what happens following that. All the best. We'll talk soon.